Okay, record. Thank you. Yeah. Okay, so maybe some of you all might not be the subscribers, but at least you know our existence. So this gives you like a good opportunity to take a look at what we discuss during every week, and then kind of like get to know the inside the inner stuff okay, the inner secret stuff. So this session, right, I didn't really prepare much, mainly because for this week, right, there's nothing much moving on in the market also, except that market recover from the drawdown, and then I'm personally quite happy with it. So what we do is we will discuss the Singapore fund flow first, and then I go through my personal portfolio updates to share what is my performance and what are the things that I bought and sell for the week. Then after that, we go through some of the specific counters that are worth looking at. Okay. So since this is a Christmas week, right? There's something special that I would like to do also, which is to kind of like do a recap on the entire 2021 trading performance. So recently, I'm not sure if, sorry, drinking wine and then need to but sometimes I have to remind myself the camera is on. Yeah, so I like to do a review on my own personal performance, the total Nimbus Capital performance. And I think this kind of performance review, right, it does not only help us. Wait. Someone text me today got webinar or not? Wait, sorry. My personal motto is no one get left out. Okay, sorry. Yeah, so I like this kind of recap, right? It's not only good for my own personal development in terms of my trading strategy, but at least you guys as the follower, you guys know the performance also, so you know what to expect. There are things that you can like plan in advance. There are statistics that you can make use of, and it's something that can improve your trading also so that you are not following blindly. You know, for example, if you take this trade, right, how long do you need to hold? What is the winning percentage? What is the chance that this counter can, like, how far can it retrace before it hit the TP? This kind of thing. As if you know the proper statistic, right, it will give you comfort and confidence in holding certain trades and make your trades better also. So that's one of the major thing that I want to go through today. So the statistic report, right, I released on Investing Note, on Facebook, on quite a number of platforms. I'm not sure if you guys managed to see it. Let me go and find it. Very fast one. Okay, let me go and dig. I think sometimes I post too many things at one go and then certain things get buried. This one right here. So you can go and find this, and then there is a link here which gives you the entire PDF report. So I can't upload PDF into the Facebook, so it's here you can actually see all the. But anyway, I'll be going through this today also very roughly. But if you want more detailed stuff, right, you can go and take a look at this. This is publicly available, and at the end, right, I actually link all the trading view stuff so that you will know these are legit trades that were taken on the day itself. They are not like hindsight, like look back and record the trade like that. It's not that kind of thing. Okay, so I think it will be very helpful for any traders who need like data and who need statistical support for actions that you want to take. Okay, so firstly, let's go through the fund flow first. So this is the Singapore fund flow. We tend to look at institute and retail, but what we are focusing on is we focus on the institutional fund flow. So this fund flow is released by SGX every Monday, and it is the fund flow for the previous week. So if we look at the calendar, now it's like Saturday already. So the fund flow actually came out on the 20th. But even though the fund flow report came out on the 20th, right, it's actually for the previous week. So when you look at this data, we are like lagging 2 weeks behind. We are lagging 2 weeks behind. But nonetheless, right, the purpose of the fund flow is to get a general picture of the market health it is not there to time your entry. It's not there as a buying signal. So we don't really need like a very good, very timely report number. We just needed to see how's the overall market is like. And you can see that for the weekly fund flow, right, the institutional remains negative while the retail remain on the positive side. And if we go to the raw data, right, you can see that the institute have been selling for almost 8 weeks straight, 2 months straight. And I know this is a positive in the middle, but this is like plus 30 million. So I don't really consider plus 30 as significant. This to me more like a neutral. This can easily go to like negative 10 million or something like that. So I will consider this entire stretch red color. Whereas you can see that for the retail, right, they have been consistently buying for the past 2 weeks. So if we look at the chart, right here, let me show you the chart. If we look at the Singapore market, right, this is US. So if we look at the Singapore market, you can see that the past 2 weeks is not really a very optimistic outlook, and it's like going sideways. And if you want to kind of like look at it from another perspective, right, you can see all the retailer buying, but the price isn't really going anywhere. And then we can see that there is this big engulfing red candle coming in. So despite so much retail buying, right, price is like not really going up. And if you consider this as an up move, right, this up move is supported by retail. In fact, there isn't any institutional buying. So even way before this period, right, we kind of expect Singapore market to drop somewhere around here already. In fact, I give out a short sell signal for those who are able to short sell STI index, and I think those who managed to did sell it, right, should catch a very good profit here. But overall, going forward in the next week, I don't foresee Singapore market to be doing well. So you might want to stay away from Singapore market for now. And Hong Kong, right, Hong Kong, there's nothing really much to say because we have been avoiding it since like July, like that, like ever since this level was broken, right? Ever since this level was broken, I made a very clear-cut call that no Hong Kong trades will be taken until we see price kind of like recover above this level. So until right now, we don't really have any Hong Kong trade. The only one Hong Kong trade we have very recently is L'Occitane, and I think that I'm not sure if I'm pronouncing it right. It's the only Hong Kong counter that we have, and it was more like a experimental counter. I kind of like upfront say that maybe you might not want to enter this at all. It's just to like test the water to see what's going on. And in fact, you can see that the last Hong Kong trade we have was way back in July, 12 July, China Suntian, and luckily that last Hong Kong trade we have managed to hit the TP, but ever since then, everything has been Singapore, US, Singapore, US. And one thing you might notice very recently also is that from the beginning of November, right, there are no Singapore trade setup. There's literally no Singapore trade setup at all because Singapore market has been quite weak, It's kind of like coincide with here. If you look at early November, right, it is somewhere here. Is like right at the top, and we managed to avoid the whole drop down altogether. So when I say avoid, right, we managed to avoid entering any new counters that can incur us much more loss. Of course, if we have any Singapore position open, we are definitely bound to take some paper loss, or if we get cut off, right, definitely hit some stop loss also. But at least we prevent ourselves from getting more loss than we should, and that's how we want to prematurely stay out of certain market. For example, there's a lot of traders, there's a lot of friends I know who stubbornly keep buying Hong Kong, keep buying Alibaba, keep buying Tencent, like until now, from like the mid of 2021 till now, right, keep averaging down, and there's really no profit to be had. Whereas for ourselves, we still managed to get some profit on the US end, maybe a bit here and there on the Singapore side also. So sometimes it's hard to appreciate the loss that could have been prevented by not entering certain trades, because those losses are not really recorded, they are not tracked. So you don't really have a tracking measure, so you can't appreciate that number. But if you compare to, say, someone else who have been always entering Hong Kong market, right, then if you compare and contrast, then maybe there's a little bit of comparison that can be done there lah. So next, let's take a look at S&P. So this one, very lucky break, a very lucky break for us. I say lucky because I mean I didn't really expect it to recover within this week lah. I thought like you know, Christmas, then not a full trading week, then I think market might continue to dive, but yeah, but we did recover. So it was quite a good break where we managed to see some of the counter become green. So hopefully most of your position managed to become green also. So whose position equally bad, sorry, whose position are still equally bad for the past 3 days? Like US market recover, but your account still like worse and worse. Anyone? So this session special, it is your one of the rare chance we can interact lah. We have the time lah. Okay, so anyone? Hopefully no one now. Hopefully no one. So Dow Jones not going to go through, because when we trade, right, we tend to go for S&P counter lah. We don't really go for Dow Jones counter, because Dow Jones counter are like much more, I don't know, the growth is not there. They are much more dividend focused. And when it comes to trading, right, we don't really focus on those dividend focused counters lah. Okay, so Dow Jones not gonna go through. So Hong Kong we go through already. So next, let's go through my portfolio. So my portfolio, this one I think no surprise. Last week I dropped to like 29%, and somewhere along the way it dropped to 28%. So my portfolio at its height, right, it was like 44%. So during this retracement, I actually lost about 13% of my portfolio. So so those losses are actually unrealized loss. So initially it was like 15K like that, but now it has dropped down to like $500. Excuse me, but at its lowest, I actually went into negative 3,000. So from like plus 15, it went to negative 3,000, and now it's back to plus 500. So to me, right, even though it's unrealized, that 15K loss is a loss that is gone. So to me, it's like it's the same to me. But you will notice a few things. I cut loss on Propnex and Airbnb only. So there were two only counters that were hit with a stop loss, and I only take my loss on those two counters. So you can see I'm still holding a bunch of other counters that did not hit the stop loss. So I am still following my trade plan. And as the market recovers, right, my account also recovers. So let's say if I panic, or if I don't follow my risk management, I panic and then I just exit everything, right? Now the market past 3 days recovers, I will not get the chance to recover already. I will eat that 18K loss, because from 15,000 plus went into 3,000 minus, so that's a 18K loss. So I will eat that 18K loss, and it is immediately a realized loss. But now, as I'm like staying calm, follow my trade plans, right? Counters like Nvidia recover, Tesla recovers, and Netflix recover. But of course, there are some counters that didn't recover, like Franken still like quite jialat, and some other counters are still like almost no difference lah, like minus 70, minus 215. These are small number to me lah. So for those of you who are new and looking at this, right, you have to realize that my total capital I'm running is about close to $160,000. So on $160,000, right, these are the typical number that I'm looking at. So if you have a 10K account and your numbers are the same as mine, then your risk management a bit cannot make it really, okay? You have to go and take care of your risk management a bit. So I believe I will probably end 2021 with 30% to 35% ROI. I don't think I can go beyond 35 already, unless market decide to chong next week from Monday to Friday, just chong all the way. But I am happy to end with a 30 to 35% ROI for this year. In fact, this year has been quite a tough trading year, and 30% is one of my, I would say, the minimum target that I set myself to be able to achieve on a trading account. So why is it so? Because I think I still beat S&P. So I mean, if you are trading, right, no matter what, you must beat the S&P. If you cannot beat the S&P, right, you might as well don't trade and put your money into the S&P now. Okay, so that's the whole logic behind why investing is like confirm earn one, because you put your money into S&P, right, it's confirm earn lah. If you spend so much effort, so much time looking at trades every day, go and headache at night, cannot sleep, this and that, but your results still cannot be S&P, right, then it's quite jialat lah. But usually on my best trading year, I tend to get about 90 to 100%. On my normal trading year, probably 50 to 60. So this year I consider it as a not a good year for me lah, quite a bad performing year. In fact, for those who have been with Nimbus Capital from the beginning of the year, right, you will remember this video. You will remember this video like week 1 of 2021. So what we did was we went through goal settings. Okay, we went through certain goal setting, we crunched certain numbers, and I have put up like a trading plan for your like trading goals to achieve lah. And one of the things that we talk about is one of the strategies that we talk about is a strategy that I'm personally using. That is, I have $1,000 a month that is going into STI ETF. So you can, I will put up the link, you can watch this video, okay, if you're interested, so that I don't need to go through the entire video here, because I think I did explain why STI ETF and why not S&P. If you guys are wondering how come this guy putting money in such a lousy ETF, like STI ETF is trash. Yeah, but one of our target is that we have 50K trading capital. But I think after that, I reduce it down to 30K lah, because to save up 30K is quite easy. You just need to like focus your saving for like 1 or 2 years, you can get 30K saving easily lah. So one of our target was we want a 30K return on our trading capital annually. And on that 30% return. So on that 30% profit, right, we retain 40% of our profit, and then we transfer the remaining 60% of our profit into STI ETF lah. So after we do all this, right, I actually have a spreadsheet that came up like this. So initial trading capital is 30K, yearly investment fund is 12K, which amount to 1K per month lah. And yearly trading return is 30%. So 30% a very modest return, and yearly investment return is 4%. Now 4% is also a very modest return. Like you is supposed to on par with your CPS special account lah. But to be realistic, right, every year if you do this kind of passive investment, right, especially if you put your funds into like say S&P, right, you definitely can get more than 4%. Even for STI ETF, you can get more than 4% every year. That's like quite I mean achievable target lah. Okay, and then 60% of the trading profit is rebalanced into investment capital. So I set up all these numbers, and then I just pull down lah. And then what you realize is that you can actually achieve $1 million within 19 years. You can achieve $2 million in 26 years. So you can see that these are the kind of numbers that a diploma graduate on like a 3K, 4K salary can achieve one. And imagine you are like, I don't know, some manager, like director, one month earn like 8, 9K, right? You maybe if you are at that level, you're already a millionaire lah. But I think I'm just trying to say that these are not overstretched to kind of like show you the effectiveness. In fact, these are extremely modest that anyone can achieve. So we set out to get this 1 million target within the next 19 years lah, which is if you combine trading and investment, right, the compound rate is actually very, very fast. Because if you just invest without trading with like 5-6% annual return, right, you will still take close to 30 years, 40 years like that. Maybe not 40 years, maybe 30 years. And in fact, I did a chart that show your compounding rate. So if you just have a normal compounding at 4%, right, then you will probably take about 50 years to achieve 2 million. But if you have a 30K trading portfolio that you can get 30% return, which is a very small amount, very small, not small amount, very small expectation, you can cut down that 2 million target by half. You can achieve it within like maybe close to 25 years. And imagine that on certain good years, you get like 60% return, 70% return. You will cut it down further to like 20 years like that. Okay. So that's how you do your tracking, and then every year, right? Every year you see where you are at. So currently for me, I'm at my like 10th year or 11th year already, either one. So if I have my 11th year, right, I see whether my trading capital is 104K or not. So currently my trading capital close to 160K already. So I'm actually quite far ahead. So if then my investment capital is currently right now about 500,000, so somewhere like here like that. So actually, given my current status, right, I'm instead of at the 10 year, I'm actually at the 15 year. So I'm kind of like ahead my target by 5 years, and I can maybe achieve this 1 million target in like the next 4 years, or if next year I can perform better, I can achieve it even faster. So these are some plannings that you can do for yourself to ensure that you are on track. And at the end of the year, you know how much you can take out and spend on like Rolex or on a trip to South Korea. Now VTL open already, right? I don't know about all the VTL. Okay, so these are some soft skill. I like to call these soft skill because we are not talking about entry, exit, what to trade, what to buy, rather other things that actually matters more, which is like planning, trading your plan and working out your goals so that you don't stray far from the goals. Okay, so shit, I sidetracked too much now. Sidetracked too much. Yeah, so just I think all this is just to say that 30% is bad, but it is still within the expectation. Okay, it's still within the expectation. So in Nimbus Capital, right, we are more grounded in the sense that we trade in a way where it is much more closer to the reality of trading, because we don't suddenly one day go and buy like, I don't know, 100 options on GameStop and then suddenly have like 1 million profit, that kind of thing. I think those are kind of like risking too much. So we are more grounded in the sense that we do things that are safe, but that are also achievable in a safe manner. Okay, so next, let's go through a couple more things. Let's go through some of the counters before I go through the statistic. Okay, then after that, those who want to remain online and ask certain questions, ask what can buy, what cannot buy, you can ask now. I will remain online. Okay, Singapore market. So unfortunately, this one very unfortunate. I will repeat again. Propnex is gone. Propnex is gone. The Propnex era is over. Sorry, why very laggy? Wait. Okay, so unfortunately, Propnex era is over. So there are probably some of you managed to cut, but some of you did not manage to cut, or those that managed to cut, you panic and then you rebuy again because suddenly like go up, that kind of thing, right? But personally for me, as you've seen from my portfolio, right, I actually cut at like the opening, like right here. I'm not sad, I'm not emotional. In fact, we have Propnex all the way from the earlier like 50 cents, 60 cents, that level. So when we cut here, right, we lost the money on the final trade, but we did have profit from all the previous trade that we gotten. So anyway, this cut loss is like cashing out for me. Yes, of course I did forgo the profit that I will have if I cut at the top. But the thing is, you cannot predict the top. And if I go and prematurely cut like here, right, or maybe here, what if it continues to rally? Because we didn't know the cooling measure, all these things will come in. So I will always favor consistent and discipline compared to trying to predict here, predict there, and then end up all your prediction wrong and all your data and results are all over the place. So I rather just religiously follow my trade plan, because I know what to expect when I lose and I know what to expect when I win. So that is consistency. And that's why in the market, right, there are things like crude oil futures, those agriculture futures have, because a lot of companies that buy all these commodities, right? They want to have consistency. That's why they buy futures to lock the price. So in a way, right, trading is also same thing. We need to have a consistency plan in order to have certain expectation and in order to plan the risk for ourselves. We cannot always be a fortune teller like that, predict here, predict that. That never works out for anyone. I can tell you that kind of trading style never works out for anyone. So I'm willing to expect situation where I'm never ever going to get the top, but I will always have consistent result. Okay, so aside from that, right, Propnex is also in that kind of situation where, yes, we have a recovery, but this recovery, I believe, will not be very long. I think you guys might have saw the Propnex video already. I'll just go through roughly a bit. Also, it's still below the low. It's still below this the support level and the effect of this cooling measure, right, we cannot really see right now, and we probably can't see in the next earning report, because the next earning report probably doesn't include the impact of this cooling measure So the only time maybe we get to see the impact is probably like 6 months from now, or maybe like 1 year from now, to have a better picture. So until then, right, I don't believe the price will be able to go and break the highs or whatever So I think it can become like Propnex. I think it can become like Union Gas, where even for Union Gas, right, after the whole thing come down, right, yes, all the value investors are coming in, but after that, right, I mean, despite all the good news surrounding Union Gas, there's a lot of articles that saying, yes, price drop, but the earnings still strong, profit still strong, but market doesn't care. Market doesn't care really, because everyone knows Union Gas era is over. We have a nice run during the COVID-19 where a lot of people cooking from home, all the home-based business, all the, I don't know, all the baking, all this. Yeah, so the era is over So for Propnex also is a little bit sad, but I'm willing to just get out of here and put my money somewhere else Okay, so with Propnex gone, right, I think there are only quite a few numbers of bullish counter in Singapore market left. One is Hourglass. So Hourglass, right, it is one of the counter that I mentioned that you can enter, you can go for it, but a bit of caution is that if you are holding majority Singapore trade, right, maybe you might want to forgo Hourglass because what we are essentially trying to do is we are trying to get the support trade So it's a rebound from support trade. Okay, it's like touch the support buy, but later when I go through the statistic, right, you will realize that this kind of buying as support is one of the strategy that perform very badly. Not perform very well. It is the strategy that perform the worst, because I have 4 entry strategy, and among that 4 strategy, this strategy performed the worst. So worst is relative it breaks even I have like 50% win, 50% loss, but it's still it is the worst performing strategy Okay, so you can like, I don't know, if you are filled with a lot of US counter and you just want to balance it out, right, maybe this can be good. Or perhaps you don't really have a lot of losing counters, some of your counters are still in profit, and you just want to like take a little bit of risk trade, right, you can go for this also. Next one is Grand Venture. So Grand Venture a little bit it's like Franken like that. It kind of like dropped very sharply, but it recovered a bit, and we kind of like escape that stop loss here We kind of escape the stop loss here, but it's not going back up. It's not really going back up yet. So this one basically, right, if you are holding this counter, I'm personally holding this counter also, just hold on to the counter, follow the trade plan, don't do anything funny. But for those who are looking to enter this counter, right, I will advise against it at this current moment. I will advise against it. I think maybe AEM does look a lot better, but even for AEM, right, it is like consolidating here. I would not recommend entering AEM right now also until it break out of the resistance. Then maybe we can place our stop loss here then we can go for the second profit trade on this particular counter. So let it consolidate first. You do not want to like buy here and then this whole thing go and come down, and then like you will waste your capital, which could be used somewhere else. Okay, but I say AEM is better mainly because of the trend. The trend is like up and it's still hanging around there. It doesn't show sign of weakness where things suddenly come down like that, like Grand Venture like that. Okay. So next one, UMS. UMS came down. It came down already, but it kind of like hovering here. So this is like the trades, one of the important chart structure I always mention. It is a resistance turn support, but the candles and the volume here doesn't show any sign of support yet. So you don't like prematurely jump in and say this is a support, because it can just sideways and then go and come down like that. It is only a support if you start to see bullish candle come in. So a proper resistance turn support, right, is Tesla, because we have a resistance here become support and now it has gone up already. So if you buy here, then you can put your stop loss here, or if you manage to buy here, right, then you can put your stop loss here. But the way UMS is right now, it is not a established support yet. You are like trying to buy here, and this one can like go down some more if you go and prematurely enter. Okay, so overall, right, I think only AEM and Hourglass look quite okay. Franken is also on a very weak side. I don't really want to go through Franken also, mainly because it's coming down. And in fact, one of our later entry was hit with a stop loss already. So at this moment, I don't recommend any entry on Franken also. If it does recover, then we will go through that. Okay, so on the US side, things seems to be a little bit more bullish. And of course, congrats to any one of you who managed to get Micron technology. So Micron was like, the analysis was given here. I think within that analysis video, right, there was a trade setup in there also. So if you enter there, you might suffer a bit. You might suffer a bit, but eventually you are rewarded. Eventually you are rewarded. So any one of you with Micron? So sad, no one with Micron. Oh, Kathleen, you everything have. Congrats. Nice. Okay, so Micron is a very good example of sticking to trade plan. Okay, because when we enter Micron at 19 November, right? Not when we enter, when the video for Micron came out at 19 November, I think the stop loss given was like around 60 this level, because this is the swing level. So the stop loss was slightly below the swing level there. Okay, so and then the TP was like 100 plus, somewhere up there. So when after this video came out, you can see that for the next 2-3 weeks, right, Micron is like kind of like going stagnant a bit. And then during that period, you have all the counters dropping left and right when the S&P dropped, but Micron kind of like didn't really drop. It just kind of like go sideways. And then you will notice that this sideways, right, is actually about 9% swing. Up to top to bottom is 9% swing. So this is where stock is very volatile. If you are coming from Forex or what, right, I can tell you that Forex swing is like peanut, like very minor only. The only reason why Forex can lose a lot is because of your 20 times leverage or 50 times leverage or 100 times leverage. So if we look at a typical Forex pair, Euro USD, right? You see this swing here. Let's take a look at it. Okay, this one too narrow. Let's give chance. Let's look at, okay, let's look at this swing here. Let's look at this swing here. It's only 2%. It's only 2%. But you look at Micron, this sideways movement here. Just the sideways movement is 9.6% already. So that is to say that if you enter Micron, like maybe, I don't know, maybe like here, and then you put your stop loss like 3 or 4% down, you confirm gonna swing out in this sideways movement, and then you miss your profit. So when it comes to stock, right, you have to make sure that your stop loss need to be wider than the noise movement. And that is one of the skills that my course will teach lah, in order to identify what is the noise level of a particular stock. And then you want your stop loss to be outside of the noise movement, because if you go and put your stop loss anyhow, right, you will always get like whip out even during an uptrend. You buy in an uptrend, right, but you will still get whip out. For example, I think Nvidia is one of the very famous counter where a lot of people who take this trade, they get whip out because they cannot handle the swing. So for example, right, let's say this swing here, this movement here, huh? Because we entered here, okay? If we look at here to here, it's 17%. So it's quite a while. It's quite a while counter. And if I count from the midpoint where I enter, right, the swing down is 13%. So that's why when you look at my latest Nvidia trade right here, right, the stop loss is at 165 for a reason. And if you manage to follow that stop loss, right, then you will get this like this whole stretch up, which is like how much was that? This whole thing was like 55% like that. So it is very important to make sure that you are generous with your stop loss in stock trading. So one of the common question is that if I put such a wide stop loss, then how? Then I will lose a lot. What? No, you're not going to lose a lot. You just reduce your lot sizing. So you don't be greedy and then go and buy a lot, and then end up you lose a lot lah. So one of the key thing that you can control is your lot sizing, and you need to always adjust your lot sizing to fit your stop loss lah. Not the other way around. Okay, not you go and buy big and then depend on how much you can lose, you go and find your stop loss. It's not that way. If you trade that way, right, you probably end up losing a lot of your trades lah. Okay, so yeah, so that's one thing I want to mention also. So Tesla, right, if I think if you saw some of the videos, right, I don't really recommend Tesla for one of the counters that you can enter, if mainly because this is a rebound from support also. This is a rebound from support also. So I mentioned one very long rant in my video of why I hate this trade setup rebound from support, because people like to use the previous resistance as their TP level, and I mentioned why I do not like that. Okay, so you can go and watch the video also. That is not to say that Tesla is a bad trade. Also, if you are already in this trade, right, you can just stay put lah. It's relatively okay. It's just to say that there are better trades. There are other better trades set up. So it's like if you have 3 or 4 available trades, right? Of course, you will choose the best trade lah. But most of the time, when people take trades, right, they will just Tesla can enter or not. Tesla can enter or not. If I say can, but they just okay, I will enter now. They never hear the but, and the but is there are actually other better trades. So if you have better trades, right, why not enter better trades? It is not you look at Tesla in a vacuum and it is a yes or no answer. Stock trading doesn't work like that. You always need to compare it to every other things that is available out there for you to trade. Marvel. So Marvel also previously we have a trade set up here, but the entry was like here and here, so it has hit the entry ready. So you guys, you can go for it. But once again, Marvel, I want to emphasize, okay, if you already have like Franken, Grand Venture, Nvidia, AMD, then maybe you might want to skip this lah. We are overloaded on semiconductor counters. Next one, Home Depot. So Home Depot dropped back to the entry level here, and it does look supported. It does look supported, but maybe you might want to wait for another green candle lah. Maybe you might want to wait for another green candle. But I think this is quite a safe trade. Quite a safe trade in the sense that unlike Tesla, right? If you look at Home Depot, it's a very nice uptrend counter, and it doesn't like very volatile like Tesla like that lah. So if you enter Home Depot, right, most of the time it is easy to retain to your profits lah. Whereas Tesla can tend to like whip you up. Okay, so Apple is one of the counter that I am very looking much to enter. Previously, I made a video of Apple analysis video. I don't think I have time to dig. So you guys go and dig yourself. It's on my YouTube. It's actually a public video. So you can go and dig yourself lah. Okay. So I think that trade was given here. That trade was given here. And at the time of me giving that trade setup, the analysis, right, I did not have enough cash. And ever since then, I've been waiting and waiting, but it keep going higher and higher. So I'm looking to enter this particular counter mainly because, right, I will rank Apple up there along with Microsoft and Nvidia, that it is one of the, I would say, hard to fill counter lah, hard to fill counter in a sense. It has very good and earning, very strong cash position, and it has a lot of growth in terms of all the futures trend that are coming up, like the metaverse lah, self-driving cars, and then all the virtual reality and all this kind of stuff like Apple actually is going to be involved in a lot of these trends in the future lah. And not only that, the technical is also very strong. So there's hardly any counter out there that the fundamental, the growth potential and the charts, the trend, the technical trend, everything all lining up very nicely together. And I think Apple and Microsoft are among the two best counter that I would definitely, not just for trading potential, but also investing potential, meaning every time it drops, right, I'm going to pick up a bit of it together with Microsoft also. Okay, so Microsoft, I have already provided trade plan. I've already provided a trade. No, sorry, I've already provided an investment plan. So you can go and see. Okay, so this is an investment plan. You can go and see for yourself. And Apple, right, I'll probably do one similar like Microsoft also for investment, but trading is a different thing. Trading is a different thing. So trading will have their own trade plan, and investing will have their own investing plan. Okay, so Apple definitely on my watch list. Maybe I will wait for the breakout and then place my stop loss like here. Then that will be a good trade plan. So for trade plan, right, I don't like buying at support. I tend to go for the resistance breakout. Even the original trade entry was a resistance breakout, I think, or it was somewhere around here. Tandem diabetes. So this one, I don't know who have. Sorry, I got a private message I was reading. So, okay, this one, I don't know who have, but it is one of the obscure counters that like did not get affected by all the market retracement recently. It's just going up and up and up. So who have this counter? Who have this counter? I'm not sure if I pronounce your name. The person who just direct message me, right? Our cut loss already. It's like stop loss so far, stop loss like here like. Or you panic cut here. Long time ago. Oh, long time ago. But this one was September 8 only. Okay lah. Okay, so for Cheng Ji Xiao, sorry if I did not pronounce correctly. I will give you the information later. Okay, let me you can text me later lah. Let me finish up this. I think I'm gonna take a lot longer for this. It's already 10:30, but I'm not even like 50% done yet. my webinar, if you give me free reign, free flow, I cannot stop talking one. No, normally when I do my weekly webinar, I have a script. I try to like look at my script and make sure I don't go overboard. Okay, so okay, so for JN, right, try to be for our trade setup, try to be careful when you are using option to follow the trade setup, because right, our trade setup tend to have a little bit wide stop loss compared to other gurus or other trade calls because we want to account for the noise level. And due to that, right, it's quite risky for options, and on options it's very hard to manage your loss also lah. So I think this one is a very common questions that I have, because there are tend to have people asking me whether if I can do an option strategy for some of my trade calls. It's not that I don't play options or what, I do, but after a while I realized that how I trade is not suitable for options lah, because we are a little less YOLO. We are a little less YOLO for better terms lah. And later when I go through the statistic, right, you will see a lot more bigger pictures lah. So for me, right, is like I will earn slow and steady, and at the end of the year, maybe I get 30%, 40%. I'm more than happy lah. I'm not looking for that one shot 100%, then the next day down 50%, then the next day up 100%. Then that's like I think that got one time I spent already. I want my account to be like this. I want my trading account to be like this. I don't want like this, 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 like this. Then end up still nowhere. Whereas I'm like slowly going up like this lah. It's less easier on the heart. Okay, Shopify. This is one of those examples is where you will truly appreciate the stop loss. You'll truly appreciate the stop loss, and this is not the first time. This is not the first time really. It's like many times we have this kind of scenario where we are just barely away from the stop loss and price recovers lah. Okay, so if you are looking for Shopify, right, Shopify, I don't recommend for a lot. For most people to enter, mainly because number one, Shopify is very expensive. It's $1,000. And if you are going to follow our stop loss strategy, which is 2% risk per position, 2% risk per trade, meaning if you have $10,000 trading capital, you can only risk $200. Okay, so if you want to take a 2% risk on this particular counter, right, maybe you can't even trade one share. You can only trade like fractional share, because from here to here drop, from here to here drop is $400. If you buy one share, right, you're gonna lose $400 already, meaning you can't even trade one share of this. And the reason why the stop loss is so wide is because, do you see how much it swings? And even though it dropped here, right, it is still a higher low. It's still a higher low. It's still an uptrend. It can still continue to go up. So that there are reasons why certain things are at certain level. Okay. So as a trader yourself, right, you need to be able to judge by yourself, should I take this trade or not? Like you cannot blindly anyhow just chung in like that. You based on your trading experience, based on your own ways of handling your emotion, right? Sometimes you need to like see really this trade definitely not for me really. So whereas if you look at Microsoft, is more easier on the more easier on the trader lah. When they go up, it start to go up. When they come down, right, it doesn't like that also. It just come down a bit and then continue to go up. Now it's a bit, continue to go up. So if you look at this swing, right, if you look at this swing, it's about 9%. But if you look at Shopify swing, right, well, I tell you this one is like a lot. Okay, so next one, Facebook. So Facebook, I'm definitely still bullish, and in fact, this one gut feeling. In fact, I believe this to be a higher low. Like I don't think price can go below there already. Okay, so that doesn't mean that price will never go below there. If it does go below there, right, it means that you should be out already. Meaning this one not a good trade really. If it goes below there, it means that this is a lower high and everything going to be shit really. Going to be, you got public people here. You don't hide them. Okay. Later you pay for my income loss. Suddenly everyone leave. Just kidding. Yeah. But I mean, my gut feeling is that this area is I believe to be a good support level where you can plan your trade around. So ideally, right? Ideally, I will expect Facebook to break out first, and then I'll be confident to take the trade. And if I take the trade there, my stop loss will be below here. so that I can account for this noise level. Okay, so that's how my trade. And once I get the trade and put my stop loss here, right, I can tell you don't need to do anything already. You just wait for it to like to the moon lah, or where lah, I don't know lah. Okay, so that's how I normally do my trades lah. So this one good to watch, good to watch. Costco, okay, Costco also very we original entry here, then market like drop here, drop there, but Costco so far like okay lah, like a bit stable, nothing big happening. So you can see Costco right is also very easy on the trader. The moment it start to go up, right, it goes up very nice, and when it kind of sideways, right, it's sideways a bit also, so it doesn't like Shopify like that lah. In fact, I think in the future I will avoid counters like Shopify. I will not recommend them lah. Okay, so Costco is something that you can consider going in also. We have a trade setup on December 14th. And Ford Motor. So Ford Motor retrace a bit, but once again during this retracement, right, it is just hanging around. So that's like it's almost no difference from our entry. It just dropped by slightly a bit, 5%. I think 5% is normal for stock. Okay, 5% is very normal for stock. If a 5% drop like this is causing your account to lose very big, it means that you are over trading. So you need to adjust your lot sizing a bit. Okay, so these are some of the potential counter in US that I can recommend, and I mean these are already open trades lah, but because we have quite a number of open trades, right, I don't really want to add more open trades, but rather look at the trades that we have open and see what are the counters that we can still enter, because as the market is like recovering, right, I don't believe we have completely recovered yet. We, even though S&P closed all-time high, I still think that it can like kacau us a bit lah, like trying to be funny like that, like it can kacau us a bit before going straight up like that lah. So to be honestly speaking, right, I don't know how next week will be like. Initially I thought the entire year will be quite negative already, but somehow I did not expect to see this recovery in the last 3 days lah, and market definitely prove us wrong all the time. The key thing is that whatever market happen within these 3 days, right, no matter what, I still follow my trade plan. I don't suddenly change my trade plan because of like 1 day movement, 2 day movement, that kind of thing. Okay, so you will see I have DBS there. Mainly because DBS is the only Singapore counter that is like doing very well. Even I think on my Facebook, some of you might probably saw it lah. I mentioned that DBS is my favorite rubbish collector because it has to carry 29 other trash around because like they are not doing anything. Yeah, so that's basically about all my trade calls that we have, all the updates that I have. So next, right, I know we are like 10:35 already. So for those who do not want to listen to the statistical stuff, you can actually leave. But if you are interested, right, do stay on, because this is where I go through all the data that I collected from the trading of 2021. And you can kind of treat it as my trade journal. And you will also realize the importance of having a trade journal because of the amount of information that a trade journal can give you. And from there, right, you can improve yourself. So if you do not have a trade journal and you do not know why the hell should I have a trade journal, and then this is definitely for you. Okay, so I'm not going to go through the report, but rather I will go through this one. So the public folks, right, you all should have ready, you all should have access to this. I shared some time back. I shared this entire link, but the only thing that you doesn't have is you don't have all the open position lah. So open position, I'm not really worried because currently I have about 30 open position, but we have a total of 136 close trade already. We have closed off majority of them already. Okay, so firstly, let's look at the overall data lah. Okay, so you can see here that these are the total trade by outcome, meaning either profit or loss. So for let me zoom in. Okay. Okay, yeah. Okay, so these are the total trade by outcomes. Okay, we have a total of 136 close trade with 87 win and 49 losses. So if you are wondering how am I tracking all these data, actually there's a tab here, and within that tab here is like all very messy. There's a lot of count if formula here that I'm tracking. Okay, so it's not I purposely draw nice chart here. It's from actual data. But this one proprietary secret lah. Let me hide that data. I remember got one time I was keying all the data here. Actually here also I have all these data here that I hide. As I was keying all this data, got one person, I don't know who, got one person who was like watching here. They will give you a small symbol here that says who is watching. Then got one person there like watching me key in all the entire data, watching me input everything. But I didn't care lah, because if I wait until the person leave, I don't need to do work really. Yeah, so 87 profit and 49 losses. And among this, right, you can see at the bottom there is ZOR position. So these are my personal position. So I cannot take all the 137 trades because I don't have unlimited capital. So instead of taking all the trades, right, you see this tick here. These are the ticks these ticks represent I personally have position, okay? So these ticks mean I personally have position on this counter. And you do not have to worry about what I enter, what I doesn't enter, mainly because eventually you'll realize that the percentage is the same. it's like exactly the same. This is like 64%, then this is also like 64%. So it is, you can think of it as flipping a coin like that. Because when you flip a coin, right, if you flip long enough, you are always going to get 50-50. And it's the same thing with trading. If you are consistent enough, right, at the end, you will come up to about the same percentage. It's like you don't need to go and choose, okay, I will flip the coin this time, I won't flip the coin that time. You try to like control your odds of getting the hit. But eventually, if you flip enough time, you will come to this. Okay, so the key thing is consistent. Of course, trading a little bit different. If you go and keep trading during the bearish market, of course everything will be lost. And if you go and trade, if you happen to be lucky, trade everything during bullish, right, then you will be a little bit more profitable. But the key thing about trading is that there's no way we can tell when is the bullish ending and where is the bearish starting. So there's no way for us to prematurely like stop trading altogether. In fact, for this November, right, we did prematurely stop trading a lot of Singapore counters. And like you can see just now, early November, we stopped Singapore market altogether. We only have US stock. But even then, those that we already have, right, they can end up in a paper loss, in a temporary paper loss. So traders, right, there's one strategy that trumps everything else, and that is consistency and discipline. But a lot of traders out there want like the perfect top, want catch the perfect bottom, want to only enter when things start to go up, want to exit immediately when things start to go down, right? They try to keep predicting here and there, but the result is never going to be better than someone who is consistent. So consistent is important because number one, you know what to expect. And number two, you will be comfortable with your result because it's always consistent. And number three, right, you don't need all these predict here, predict there. And number four, it's easy to have a statistical data to manage your expectation if your trading habits are consistent. Okay, so let's go through other more important stuff. So next, trades by market. You can see that I definitely favor Singapore. I definitely favor Singapore market. But this one, I'll be honest with you, I think this was a mistake for this year. And Singapore, I don't deny Singapore market, not a lot of good stuff to trade. But the key reason why I favor Singapore market is my personal hit rate on Singapore market is very strong. In fact, the Nimbus scanner, right, that is scanning for Singapore stock is a lot more effective because actually it is tuned towards Singapore stock. And in fact, if you look at the Singapore stock scanner and if you apply your own strategy onto the scanner, right, you can get a lot of good trades. And if something pops out on the Singapore scanner, right? Most of the time, like for example, at one period, Propnex keep popping up during the 80 cent, 90 cent level, and when we took the trade, right, it went all the way to $2 like that. So this one I explained a couple of times with my subscriber, but for the public folks, right, this is for you as well. And I think it's very ironic because Singapore market is so weak, it's so full of trash and nonsense, right, that if a good counter were to show up, it's easy for the scanner to catch it. The moment something good comes up, right, all the red light or all the green light start flashing, like, hey, pick me, trade me. It's very easy to catch all these counter. That's how you manage to catch Grand Venture, Propnex, Union Gas in its early stage, Franken in its very, very early stage. Like Franken was like last year we get ready. Even Propnex was last year. So it is very easy to catch all these counter, and that is why I tend to bias on Singapore market a lot, because if I trade 50 Singapore counters, right, there is a good chance that maybe 40 of them will be TP, 10 of them will be lost, and within the 40 TP, right, maybe 20 of them it will be like go up even higher and higher, and we can have like the second trade, third trade, fourth trade lah. So that's why I favor Singapore market. But my one thing that I regret is that at some point, I don't know when to stop lah. So I think that's my weakness that I learned this year. At some point, I don't know how to stop. In fact, for the second half of 2021, right, we barely have any good Singapore trades that TP, except for maybe Hourglass or like a bit of some random stuff here and there, right? We hardly have anything that in Singapore that TP. Those that we TP for Singapore counters, right, are probably those that we have been holding from the first half lah. So even things like Fortress Mineral and Southern Alliance, right, for those who remember, we have a huge run on Fortress Mineral, even Southern Alliance, but towards the second half, right, these counter tend to fall off. Even Union Gas fall off during the second half. So it was that point, I believe I should have caught the trend and could have stayed a little more towards the Hong Kong side lah, because you can realize even by July, there's still quite a lot of Singapore trade. In fact, Union Gas have cut loss. I think the subsequent counters also cut loss like ISDN. The only thing that we are still profiting is Grand Venture, Franken, Propnex. So the Propnex also cut loss already. Yeah, so that's one thing that I think next year I will try to improve on. In fact, by September we went into US, more on the US, and then that's where most of our Singapore losses were covered by the US side because we have things like AMBA, Nvidia, all these start to give us a lot more profit. So that's one thing I will try to improve, and in fact I believe the ideal IFAS is still running. I believe IFAS still haven't hit the stop loss yet. So I mean it's still an ongoing trade lah. So if it does not hit the stop loss, we are not going to exit lah. We initially have an IFAS trade, I think last year or early this year. How many IFAS trade did we have? We have an initial IFAS trade on the 2nd March. And then after that, we have a second trade, which is still like ongoing lah. because it keep going out and coming down, it keep going out and coming down. So I decide this one is what I mean by consistency lah. I'm just gonna stick to the plan and then see how it goes lah. Okay, so the ideal allocation I will probably should have done like 40% Singapore, 40% US, and then 10% Hong Kong. So Hong Kong, this one, I believe we did everything that we can. I think that's the best that we got, mainly because you can see that for, you can see that, so sorry. You can see that just now I explained already, right? After China Sun Tian from July, we have 0 Hong Kong trade until only L'Occitane, I'm not sure I'm pronouncing correctly. It was a test water trade, just test the water trade, not really like okay, Hong Kong recover really that kind of trade. No, but it's just trying to test the water. And I think that's the best that we can get for Hong Kong, because if you look at the win-loss for Hong Kong, right, we actually have 10 loss and 9 wins. So even when we were trading Hong Kong, we didn't end up like 8 losses and 2 wins. We still managed to get a very close to 50-50. So I have no regret on our decision with Hong Kong, and the fact that we stay out is probably the reason why I can still get like like 30% return if I am focusing on bottom picking Hong Kong, right? I can tell you this year no more profit. I think this year all the money fly. So you can see from the win-loss by ratio, US and Singapore are definitely the biggest winner. Of course, Singapore have more volume, but let's say if I have shifted to US earlier, right, maybe we could have end up with lesser loss on Singapore and maybe more win on the US. So we could have, there was rooms for improvement. Okay. And next, hold time. Hold time is very important. Our medium hold time is 39 days. So we are not scalper, we are not like today go in, expect tomorrow fly, not those kind. So this one I have to emphasize also, there is no analysis anywhere out there that can predict the timing. Timing is one thing that you have no control over. You can say something is going to go up. Yes, it can go up, but when is it going to go up? We don't know. Be it fundamental analysis, be it technical analysis, whatever analysis you use, there is no way to predict the timing. Hence, that is the reason why we follow our trade plan. We follow the chart structure. If the stop loss is not hit, right, it can always rebound. It can always go back and hit the TP. So we don't prematurely exit at all time. There's no exception. That's the religious, that's our religion. No hit stop loss, no exit. But of course, if it hits stop loss, then please exit. Don't go and like pray something good will happen. Okay, so that's why our medium hold time is slightly long, 39 days, and average hold time is 63 days. So try not to look at average hold time. It's not really representative, mainly because we do have 3 or 4 outliers trade that end up holding for like 200 days like that, and then it skew the data towards the end. But from the data here, you can see, right, there are 27 trades that close within 10 days. Okay, then majority of our trades are within 10 to 60 days, and the medium is about 39 days. And within the 27 trades that close in 10 days, right, we have 23 days that is profit. There's only 4 trades that were lost within the 10 days. So you can kind of tell yourself that 1/5 of the time, right, 1/5 of the time, your trade is probably going to hit TP in 10 days, 1/5 of the time, which is like, I think is a very good number. It's a very good number. You can, if this is a test that you can see yourself. And these kind of trades, we are not scalping, okay? We are not scalping to like hit that number. Our trades usually, the profit level is like 20-30% from the entry one. So we don't scalp. So you can go back to your trading account, be it Tiger, CMC, whatever, right? You can look at your trade data. How many of your trades hit the TP in less than 10 days? And you take a percentage of it, of all the trades that you have. Is it better than 20%? And I mean, hit the TP, not you suddenly like scared and then exit with whatever profit you have. Those are not counted. Okay, and you realize that actually not a lot can hit this kind of rate. But of course, towards the 10 to 60 days, right, we are still more wins than loss. So it is kind of like break even. So there's no reason for us to exit the trades. We just hold on until we get the win or the loss. Even for those with more than 60 days, right, we have 28 wins over 18 loss. That is why I choose to hold my trades nonetheless, because a lot of traders ask me, so why not those that you hold for more than 60 days, right? Why don't you exit them? Like they've been sitting there very long. Then I tell them, actually, my data shows me that I have quite a number of winners, and I'm not going to let those winners become losers, because if you exit a trade with a loss when it can become a profit, right, then you are losing 2 times. You have realized a loss for something that could have ended up in a profit. So it's a double loss on your end, and these are the kind of things that I do not want. So from the data, right, I know that actually as long as I hold, I'm okay. So because of this strategy, you will see that when I do my lot sizing position, right, I always ensure that I can enter at least 8 to 10 counters. I don't put my entire trading portfolio into like 1 or 2 counters. Why? What if that 1 or 2 counters is the one that's going to hit with more than 60 days? Then you are stuck. If I manage to enter like 8 counters, 8 positions, maybe 1 or 2 might end up in TP within 10 days. Then maybe like the other, maybe 4 or 5 might be like within the 10 to 60 days. Then I'll probably have like the other 1 or 2 that's stuck here, which I'm perfectly willing to hold because they doesn't take up a lot of my portfolio weightage. So I can let 1 or 2 counter be stuck there as long as all my other stuff are going in and out, in and out, in and out. So these are the kind of data that allow you to build your strategy on. And because I have this data and this knowledge, right, I have a strategy that I can trust, I can play with comfort. But most traders, they don't have trade journal, they don't have any kind of data, they follow blindly. And even when they follow another guru's trade, right, they don't know what the guru statistic is. They don't even, they just see the win-loss ratio and then, oh my God, like I'm going to this counter. So it's very important because it gives you comfort, it gives you confidence, and that is where my confidence comes from. A lot of people ask why I confidently hold, because like I have data to support it, and this data I'm only showing it publicly for this year, but in fact I have almost 5 years worth of data that I've been trading. And in fact, the day that I start to jot down my trade journal, from that point onwards, right, is where I become profitable. And this is the biggest lesson that I can give you lah, if you are a subscriber or non-subscriber or whatever lah. Okay, so next let's go a little bit into the advanced statistic. So advanced statistic, we talk about the strategy lah. Okay, so I think this one probably the subscriber will know more. So currently I have 4 strategy here. Classic are the long-term uptrend counters, usually no resistance. So you will see majority of the classic counters here, like you can see here. Okay, these are the most strategy where I take my trades with. Then the other are the minor one. Then we have speculative. So speculative are pure guts feeling, usually chasing big momentum. There's no checklist. So classic counter actually have a lot of checklists, and this one my course trainee will know lah. They know like the entire 10 to 12 checklists that they have. They have to like, okay, this one meet, this one meet, this one meet, then okay, then I can take the trade. So this one I'm very, but speculative is like really speculative. There's no checklist at all. So if you see a trade that is speculative, don't take more than one of them. Like if you have one open speculative, that's good enough. Don't take more than one speculative trade. Okay. So bottom are the downtrend counters. We are trying to bottom pick counters. So sometimes, yes, you will see us pick Sembcorp Marine like that one time. Sometimes we will pick Golden Agri also, and even Golden Energy, Geo Energy. These are bottom counters. So these are the high risk, high reward counters lah. Much like speculative. So once again, right, don't hold more than one bottom trade. And the other one is support. So these are buying counters when they hit the support level lah. So for example, just now Hourglass, right, when it come down, hit the support, we try to buy the counter. And in fact, the latest Propnex trade that went to hit the stop loss, right, it was a support counter. It was a support play. See, we bought at the support. So now that you guys know this already, right? The next one, I want to go through what are considered good trades, what are considered bad trades. So good trades are those that hit the target price with very little drawdown from entry. So what I mean by drawdown from entry is the moment you enter, right, price doesn't come down already, price just go all the way up. So that's what I mean by drawdown from entry. So for example, let's say Propnex, let's say Propnex, we enter here, then our TP is here, it goes straight. It doesn't come down from your entry, okay? From your entry, yes, it does come down midway, but it doesn't come down from entry, meaning you will always be green in this trade. You will never see a red, it's always green. So in this case, there's no drawdown. But let's say we have Grand Venture, okay? Let's say we have Grand Venture. Shit, Grand Venture, I cannot. I can't pick up a good example. Okay, this one, hourglass. Let's say we have hourglass. Let's say I enter here, and then the TP is here. Then this one, there's a drawdown. Okay, this one, there's a drawdown of 8%, meaning the price actually retraced by 8%. So by measuring the drawdown, right, we actually can kind of able to track the performance of our entry lah. If all our entry keep having big drawdown, right, like every time enter, then the price keep going down, then that's not a good trading entry criteria lah. Okay, but of course we cannot expect immediately enter, immediately up lah. So there have to be some tolerance, and you will see those tolerance here. So a good trade, I will take it as there is very little drawdown from entry, less than 5%, meaning the once you enter already, the price doesn't go down more than 5%. So 5% is very little in trade already. Trading in stock trading is very little. You need to handle 5%. If 5% you can't handle, you cannot play stock. So and it must also hit the target price within 30 days. So the trade doesn't last more than 30 days. So these are what I would consider good trades. So bad trades. Bad trades are those that reach very close to the TP and then doesn't hit, but continue to go down and hit the stop loss. So these are counters that, let's say you enter here, your TP is here, your stop loss is here, you go up, and then never hit, and then come down, then hit your stop loss. So those are bad trades. And the second kind of bad trade is trades that drop right away. Like you enter already, like you enter here, for example, you enter here, stop loss is here, you enter already, then it just immediately drop all the way down. So those are what I will consider bad trades. Okay, so there are two types of bad trades. Okay, one is almost hit the TP but didn't hit, then go and hit the stop loss. Then the other one is like enter already, straight away drop. So there are two kinds of bad trades. Okay, so now let's take a look at the drawdown from entry. So these are all the profit trades. So there are a total of 87 trades here, because we have 87 trades, 87 profit trades here. Okay, so for the drawdown, right, you can see that we have 30 trades with no drawdown. So 35% of our winning trades, it actually have zero drawdown. Buy ready, immediately go up. Okay, so quite all right. And then you can see that there are 20 trades which have less than 5% drawdown, meaning you enter already, it does not go down for more than 5% and then continue to go up. Okay, and for the rest, there are 6 trades. There are 6 trades that price almost hit the stop loss. Almost hit the stop loss. They are like maybe 1 or 2% away from stop loss. So this one maybe Shopify, probably one of them. But I mean, no, I mean Shopify not inside here yet because Shopify haven't closed yet. But Netflix is probably one of them. So for those who are wondering about Netflix, right? I show you, especially those who are from public. No, not this one. This one, the first trade. So we entered here. In fact, I was in this trade. I was in this particular trade. I think there's too much data already. I was in this trade. And then at this point, right? And this point here, you can see that almost hit. And then it didn't, but it chung all the way up. Okay, so that's why if I exit there, right, I'm gonna lose 2,000 instead of winning 3,000 or 4,000, and it will be a 6,000 swing, and that's a big swing. So that's why our religion is no hit, stop loss, no exit. So there are 6 trades that almost hit the stop loss. Then there are 6 trades that drop 15 to 20%, 11 trades drop 10 to 15%. So I think it is quite reasonable to expect most counter to drop 5 to 10 and 10 to 15 lah. These are the 2 sectors that maybe we want to be a little bit careful. Those that are almost hit the TP or drop close to 15-20% lah. And it is good to see that these 2 are the minimal lah. So from our entry perspective, right, I think we are doing quite okay. We are doing all right. So next, let's look at the loss trade. Okay, so the loss trade are the 49 trades you see here. So here we have 49 trades, and we have 12 trades that drop right after entry. So this one, there's 12 of them. If you look at it from an overall 136 close trade perspective, right, that probably come up to about 10%, which I believe not a very good number. So this is something that I am looking to improve next year. And of course, I know what these 12 trades are, and I will go in and see whether if there's anything wrong with these trades setup or not. And hopefully next year we can cut down this number lah. 12, although 12 trades on a large scale, right, it's not really a lot, but I still believe that it can be further improved lah. Okay, then we have 4 trades that almost hit the TP and then drop to SL. So 4 trades, I believe, still okay, still many acceptable lah, acceptable. Cannot be zero lah, but it's a very small amount is acceptable. 2 trades that are 1 to 4% away from TP. So maybe we can say 6 trades that came very close to hitting TP but hit stop loss lah. Okay, so I think these are numbers that we can improve, and I will try to improve next year on this. Overall, we have 29 counters that are sort of like, I would say normal lah, 21 loss that are considered normal lah. So what we want to avoid is we want to avoid all these drop right after entry or those that almost hit the TP, because if we have taken the TP, right, then we wouldn't be hit with the loss lah. Then just now I went through good trades, bad trade, and normal trade, right? We can see that 38 of our trades are considered good trades, and only 20 trades are considered bad trades. So that 20 trades coming from here lah. We have we still have another 2 more trades from don't know where lah. But I'm quite pleased that at least the bad trades are in the minimum, in the least number. Although the good trades is not the most, it's still the second most, and the normal trades are the majority lah. Normal trades profit are the majority. So these are numbers that I'm quite okay. So the only thing that I feel need to improve is here lah, the drop right after entry one. Okay, so when we try to kind of look at them based on strategy, you can see that Classic have the most number of good trade, and it also have the most number of normal profitable trade. And of course, it also have the most number of bad trades because Classic have the most highest number of trades lah. But if we want to look at ratio wise, right, I think ratios are much better. We have 34% good trades and bad trades is 11%. But one thing I want to show you is the support. So the support strategy, right, it actually has the least number of good trades, and it also have the almost based on percentage wise, right, I think the bad trades are quite big lah, and it also have more loss than win. So this is something that I'm quite surprised from my data, because I would assume bottom pick trades will be worse than support, but somehow support trades end up being the worst. Because what happened most of the time is that when I relook at all the trade, right, what happened most of the time is like prop next like that. It goes up very high, then when it come down and we try to buy the rebound, right, it generally become a higher low, and then it continues to go down. And one thing I noticed is that majority of the support trade that are losing, they are coming from Singapore counters in the second half. Okay, so this statistic is very important. That's why earlier I said that one thing I will make improvement next year is to not to be too blindsided and avoid certain market whenever possible. And this is one of the reasons why. And the only reason I'm managing to see all this is through trade journal and data collection. Okay, so this is where this is something that was new to me, surprising to me, and I know where I went wrong, and I know what to do next year. So the important thing is you must know what to do. So speculative trade. So this one very it's a it's a paradox, because you can see speculative have the most number of good trades by percentage lah, 50%. Okay, and then it does have like very nice win-loss ratio, so 50 about 62% win-loss ratio. So bad trades, there's 25% bad trades. So it does seems like, why not take more speculative trade? Why not take more speculative trade? So for those who are still here, right? Let me ask you the question. See if you can answer this or not. Why not take more speculative trade? Why don't I want to take speculative trade? Is there what is the reason that we should not be taking speculative trades? Gambling, okay? Anyone? Anyone else? Gut feeling. No consistent. Yes, correct. That's the word. So actually, gambling, gut feeling also correct, but JD have it correct. No consistency, because bottom, support, and classic actually have a checklist. There's a checklist that I go through. There's a checklist that I go through that there's like, okay, this is what consider support, so I know what trade is support. These are what consider classic, so there is a consistency there to define what is classic, what is support, what is bottom. But speculative, right? There's no checklist. It's like very random. So we cannot be, it's hard to be consistent with speculative. Maybe this year I get this, but maybe next year everything will be bad trade, who knows? So it's too random. There's no consistency. So the fact that this year we got this kind of result with speculative, right, is very good. It's like bonus. It's like bonus for me lah. so that there's a reason why it's called speculative. Okay, so yeah, so that is based on our strategy classification, and hopefully for the subscriber, right, next year you know, like I know what to I know what to improve on, and I know what to do. And on your end, right, it's good to go and think whether, I mean, if you are following me, that is all right, but I want you to follow with proper information and not blindly follow. I want you to follow with your own ability to make certain decisions so that you are informed, not blindly doing like super anyhow like that, so that at least when you follow, right, you have the comfort and confidence that I have in my own trade strategy also. And I believe even like traders who follow people, right, they are normally not profitable because they don't really know what they are the person that they are following is doing also. So I do hope this kind of information is able to help you make better decisions. Like we cannot just like let go of all responsibility on our end and simply just like blindfold and follow someone, and having the ability to make decision for yourself with proper data like this, right, it can definitely give you a lot more profit in the future. And that is my goal, and that is my emphasis on making this available, making this statistic available to you all. And these are all from actual trades, so these are not like suddenly cut and paste from somewhere else one. And also please take care of your risk and everything, and hopefully next year it can be, we will have a better year lah. And no doubt this year was quite a okay year for the first half, but actually the second half was a bit jialat, and towards the last quarter from like October to right now, right, it is a little rough, right? And I made a post saying that it is the real traders are the one that who knows what to do during bad times, because during good times anyone can be profitable. In fact, during 2013 to 2015, when the market was at its most bullish moment, right, it was my very newbie period. I see a lot of course trainer, I see a lot of like people providing like a lot of courses everywhere. And then after, during 2015, when the market retraced due to the oil price crash, right, or the oil price dropped from like $100 per barrel all the way to $20 per barrel, and suddenly all the course trainer all suddenly disappeared. Maybe only one or two left. And it is from there that you can see the true traders are those that is still standing through the test of time. They are not like bullish period then suddenly active, and then after that nowhere to be found already lah. Okay, so that's the end of today webinar. So instead of just blindly going through counters, right, I do hope this session is value added for you, and yeah, that's the end of today's webinar. So hopefully next week we get to get 1 or 2 trades set up. I don't know, see how the market goes, but I doubt it lah. I doubt it. I will still continue to make some analysis videos and stuff like that, but I'm kind of preparing for 2022 Patreon. You will notice that I added a lot of things, so I'm trying to make a lot of so-called like a welcome package video where I will go through what the strategies are, how to take your risk, all this kind of thing lah. So actually, on my end, I'm working on a lot of stuff lah. So hopefully things will be better lah. Okay, so that's the end, and thank you for coming and supporting this session. So once again, Merry Christmas. I think my wine left there, haven't drink yet. Like, I think turn back already now. Okay, so I'm still sitting here. If any one of you have any questions or like want to ask anything, I'm still here lah. I'm still here. So I will log off in 11:30. Already, I'll log off in 11:30. Okay, so I'll be here. Merry Christmas. Sorry, I'm gonna eat my cheese and my ham. Thank you, Ash. Yam Seng. Sorry, I got great in my mouth. JD, so sorry, let me finish my grape. Okay, yes. Patreon subscription model, right, is very funny. I have because Patreon is a platform provider lah, so content creator like myself, right, we actually have no control over how they want to do the billing lah. So it's very funny. So what they do is, the moment you subscribe, right, the moment you subscribe, you will be immediately charged with the subscription fee, which is $20. So this one I want to emphasize is USD, 20 USD. Okay, 20 USD, and there's GST also. So in case you are not aware, so there were a few times when the subscriber gonna cut like almost close to 26, 27 SGD. He was very unhappy lah. So this one I will upfront tell you is 20 USD plus GST also, and you will get charged that amount immediately the moment you subscribe. So that one is the Patreon funny, that one I don't know. I don't know. So that money I never get also. Okay, but beyond that, right, you will be charged the first of every month, but the first of every month on US timing. So if you go and sign up during the first of Singapore timing, right, US is still 15 hours away, so you will be considered subscribing for December. And then when 1 day later, when US hit the first, right, you will gonna charge again. So in order to prevent that double charge, right, I will recommend subscribing on 2nd of any month. So the next good time to subscribe will be 2nd of January. Because if you subscribe on 1st of January, right, you run the risk of getting double charge because it is still 31st in US. Okay, so that's yeah, so that is to answer your question. So I don't know why they do the upfront charge. So that's something that I'm a little bit confused, but perhaps it is more for people who, I don't know, come in the middle of the month, and then like they don't want people to see all the thing like very, or they are trying to prevent people who deliberately sign up like the 3rd of the month and then they get the entire month free, that kind of stuff, you know. I don't know, I don't really know. Andy, I actually have shared on Facebook, but never mind. I will share here again. I will share in the chat. Wait, let me go and find the link. Okay, so this is a public copy lah. There are some information that I deliberately hide because these are information that the subscriber are paying for lah. So that's to be fair lah. The template, sadly no. Sadly no, I do not provide the template. Because I can tell you the reason why I don't provide, right? Because I use it for myself only, and the things are not properly labeled for anyone to just come and pick up and use it. For example, you can see these are all the raw data, okay? These are all the raw data. Then even some of the column, right? If these are coding for myself lah. So if I like if you want to use this, I don't know how you will make use of this lah. And if I go into the data, you can see all these are all over the place, and and these are where most of the graph are coming from, because I just plot the data in whatever empty space that I can find. So if I provide this to you, right, you probably won't be able to make sense of what's going on where lah. So yeah, so I don't provide the trade journal lah. It's simply just recording everything, and then I also record all the stop loss, entry price, profit price. But of course, the stop loss, entry, profit, right? You can see it here lah. You can see for yourself here. Profit, entry, stop loss. So these are all here lah. Okay. So but I just like meticulously write down one by one, and then I just use all the formula, all this, and then put up this one here lor. Maybe hi. Okay, so currently I'm using my wallet is MetaMask lah, but I can tell you that I'm very noob in crypto. The only reason why I'm trading it because I'm trying to learn lah. I'm trying to learn the ins and out, and when people are discussing, right, I know what's going on. I know what they are talking about, so that I won't be lost. So just keeping myself up to date. So I use MetaMask as my platform. I think I also have Exodus, not platform, a wallet, my crypto wallet. I also have Exodus. And I actually started during when Binance was still available. So I actually bought like quite a big sum of Bitcoin and the stable coin. And then from there, right, I'm just transferring between wallet and transferring between all the DeFi platform to trade here, trade there, trade here, trade there lah. And at some point, I convert a bit of my crypto into Ethereum, And then now I have trouble converting the Ethereum and sending it back to my Binance to cash out. So in fact, I have quite a big sum of money in crypto that I am unable to cash out. So the only thing I can tell you is the platform I used initially was Binance. Then after that, I stopped like trying to fiddle around with it. I just like, okay, that's it. I mean, these are my money that I'm never gonna get back. And then after that, internally, I just play around with the pancake swap lah, or the Sonic, the remount swap, or all those stuff lah. So just trying to get used to the whole transfer wallet here and there and the whole swap thingy. I'm not really an expert lah, so I can't advise much. I think yes, actually that Facebook comment, right, is one of the reason why I do not want to cover crypto, and because it requires a lot of, how to say it requires a lot of knowledge, and it also requires the kind of risk tolerance that crypto requires, right, is something that most trader is unable to adjust. And during the good times, definitely a lot of profit to be made, but during the bad times, right, it is easy to just lose everything that you have made. So you can kind of think of it as like GameStop like that. Imagine you are that one of the few lucky traders who managed to catch GameStop when it first like blew up on Wall Street bet. And then the moment you catch that, right, you're probably able to turn that $2,000-3,000 into like maybe $100,000. Then you'll feel very happy, definitely. But after you experience that, right, you only want to go for that kind of trade. You only want that level. And when you start to make another trade that you feel that can become like GameStop, but eventually they never become like GameStop, that was that one chance that you have, but end up you keep making bad trades after bad trades, and eventually you lose all the you lose the initial 100K profit that you get from your GameStop lah. So that's the kind of experience that I see most crypto traders around me are facing, some friends that I know. And the worst thing is that when they make this 100K, right, you know what they do? They buy expensive stuff, upgrade the car, go on a holiday, and then spend like maybe 50-60% of the profit. Then after that, they try to make that kind of trade again, and then they end up losing 100K. But now when they lose that 100K, right, they no money to pay back really, because all those money has been spent on all the luxury. And I think this has happened to almost 3 or 4 of my close friends. And I mean, this is not, it has nothing to do with strategy, but rather the mentality and the kind of the habit of the trader himself. And because I believe majority of traders out there are not equipped to handle those kind, right? I don't really want to share also, because if I believe if I do, right, more will lose than getting profit lah. Do you usually manual sell issue order or for the stop loss, or do you advance? Okay, so this one, I have a very special method for my orders. I can show you here lah. I can show you here. So basically, my trading view, right? My trading view is premium. So I'm paying the largest amount, the highest tier for trading view lah. So I can actually set alert level. I can actually like set alert here. I actually set alert here. So these are how I set my TP and stop loss. After I set ready, right, the moment it hit the alert here, my handphone will have a notification, and then I will immediately go into my trading app, be it Tiger or Poem or whatever, right? And then I issue a market sell. So that's how I do lah. But of course, this method is useful for me because I trade full time. But when I say I trade full time, right, I'm not sitting there scalping every day lah. But I have that time available for me to keep checking at the checking the market lah. I'm not caught in a meeting, or I'm not like in Jurong Island where no internet service, or I'm in Tuas there, that kind lah. So is workable for me. But for most trader out there, right, what I normally would recommend is to set your order in advance lah. And for most of Nimbus Capital trade ideas, right, because we don't scalp, and because our median holding time is 39 days, right, within the first 1 or 2 days, you don't really need to scan anything. So let's say within the first, let's say you enter ready, within the first 1 or 2 days, you see the stock going up, right? Then you set your TP advance in order. Or when you see the stock going down, and then you set your stop loss advance order, because you cannot set both on Tiger lah. So you have to set. And as the price inch towards your TP, right, then you just keep your order there lor. But let's say if the price start to inch towards your stop loss, then you set your stop loss order there lah. So for example, with Propnex, right, let me show. So for example, with Propnex, the order, right, the trade setup was here. The trade setup was 1.83 here. So when it goes up, I actually set my TP order. Then after that, when it start to come down, right, then I remove my TP order, I set my stop loss order lah. So it does require a little bit of manual. It's not like CFD brokerage like CMC where you can set both stop loss and TP. So got that limitation which I have no idea why also. I mean, technology should be advanced enough, but I think they don't want to, like, in a way, they don't want to, within 1 day, you buy like 10 shares, right? They don't want you to hit the TP, you sell 10 shares, and then after that, on that same day, immediately hit the stop loss, you sell another 10 shares because you have 2 orders. And then now that 10 share is a short sell already, and then you end up in a lot of trouble if you do a naked short sell. Of course, in Nimbus Capital strategy, this kind of scenario are very rare, but I believe that millions and millions of other traders are like scalping that 1 or 2 point, and they can easily hit the TP and stop loss very fast within a very short time frame, and then it can end up in an accidental short sell, accidental naked short sell. Hopefully that answer your question, Alan. I do hope for a day where it's easy to sell and buy. the selling and buying for trading is more intuitive and less cumbersome lah. Okay, guys, I think that's about it. We are reaching 11:30 already. So once again, thank you guys for coming. And those who are looking to subscribe, I encourage 2nd of Jan next year in order to prevent things like double charging and those kind of stuff. Okay, so stay safe and enjoy your weekend. Thank you.